So once again, welcome to another episode. And Karan, this episode is all about Rakesh Jhunjhunwala, Radhakrishna Damani, Dolly Khanna,
The big
all the
ones.
big ones, right? Um, so again, I know these are big investors, legendary investors, and a lot of people are fascinated by the kind of generation wealth they have created. In this video, what we are wanting to do is try and understand how they have gone about creating this portfolio, how they created that kind of wealth, um, and more than anything else, instead of just randomly trying to copy and ape these legendary investors, we want to understand from an actionable standpoint for the viewers, what are some of the things that we can learn from these investors to create wealth for ourselves? What are the ways in which we can look at investing and portfolio creation and wealth management? So that is the objective of this. So I'm going to start right in. Everything that they have done in terms of the kind of stocks they have selected, how they have held on to it, or how they have kind of changed maybe and balanced their portfolios over the years, what are some of the key points or highlights that you would think that retail investors, serious investors, can actually get from these guys?
See, Santosh, I am not here to give some magic formula.
Right.
Okay.
Hmm.
So, how people select stocks, we don't know. Generally,
Okay.
people try to reverse engineer it on
Hmm.
basis of some holdings and their characteristics.
Hmm.
But there is no short formula
Correct.
for wealth building.
Right.
Okay. Just look at their portfolios.
Hmm.
I was just other day looking at portfolio of Jhunjhunwala and Associates.
Mhm.
Okay.
Mhm.
So overall wealth is 40,000 crore. Okay.
Oh.
Out of which 15,000 crore is in a single company, Titan.
Right.
Okay. I think they have exited Star Insurance.
Right.
Okay.
Right.
It was around 8,000 crore. Second holding then is Tata Motors is again 4,000 crore.
Right.
Nearly 4,000 crore. Okay. So, and they don't have many holdings.
Mm-hmm.
Okay. These are pretty concentrated bets. Okay.
Right.
High conviction bets.
Mm.
And in around 10 to 15 companies, some 40,000 crore is distributed.
Right.
Okay. With
Over some seriously long time.
yeah.
Right.
So they must have done some churn at some
Mm.
point of time. Okay, like IPO of Star Insurance and all and everything. But just take a look at the story of Titan.
Mm.
Okay. In Titan, Mr. Rakesh Jhunjhunwala entered at price of 3. Okay.
In the year?
In 2003.
Okay.
5,
At
I think.
3
5,
rupees.
5,
5
5,
rupees.
5
Okay.
rupees. In the year
Okay.
2003. He has been holding it. Definitely, he would have been accumulating it. Today,
Mm.
Titan is around 3,500 stock price. Okay.
Right.
And I don't know whether splits are there or not. I
Right.
don't think any split is there. It's
Right.
3,500. Okay. So he would have been accumulating it.
Mm.
Definitely. He would not have invested those big
All
numbers
at
in one
go.
shot.
Yeah.
Okay. Stock price has gone through 2008 crisis.
Right.
Okay. Stock was correcting massively that time.
Mm.
First thing. It went through 2008 crisis. Okay. It went through, COVID crash. Okay. It went through 2011 US debt default crisis. This holding has seen some 3-4 bear markets.
Corrections. Yeah. Major
Okay.
corrections.
Major corrections.
Right.
Okay. And he has been
Still
he continued to accumulate it. Whatever price
Yeah.
he is getting, he continued to accumulate it.
Mm.
That led to this level of wealth creation.
Right.
Okay.
Right.
So first, and this is not just story of Mr. Jhunjhunwala.
Mm.
If you look at other investors, okay, Rakesh Damani,
Mm.
Radhakrishna Damani, his wealth is practically built from Avenue Supermart.
Right.
Majority of that.
Mm.
Okay. Mukul Agrawal, he has nearly 40% portfolio in BSC today. Okay.
Mm.
Stock price has gone up from around somewhere 1,000 odd,
Right.
now around 7,000 in
Mm.
just 2 years.
Mm.
Okay.
Mm.
So it's all about the high conviction.
Yeah,
Okay.
that's what I was about to come to. So, would it be right to say that one of the key aspects to learn from them is this whole principle of conviction and like like some serious conviction in behind a bit? But I want to expand on that a bit more and try and understand how does one arrive at that kind of conviction? Like yes, you can analyze a stock and things like that, but like how do you have that kind of conviction to say that I'm going to stick through 3 corrections, 4 corrections, and keep accumulating that stock? Like what how do you get there?
Okay, let's say let's look at Titan for a
Mm,
minute.
mm,
Okay, so Titan was trading at 5 rupees
right,
in 2003.
right.
Okay, let's say you bought it as a high conviction bet. You
Mm,
trust Mr. Jhunjhunwala in 2003 also. He was a big guy that
right,
time as well.
right.
Okay, so and you bought Titan.
Mm.
Okay, stock went down by 50% in next 2 years.
It actually happened. You're
No,
just saying, okay,
I'm just
okay.
saying
Mm,
it happens.
mm. Yeah,
These
yeah,
kind of
sure,
things
sure,
happen.
sure.
Okay, so in next 2 years, let's say stock went down by 50%. What would you do?
Yeah, you'd probably try and see if there are better bets that you can.
First 3 months, 6 months, you will put some money.
Mm,
Some would be there. Okay, but after some time, you will give up.
correct.
And as soon as, let's say, by 2007, it came near your average price.
Mm,
Okay, you will sell it and you are done. The problem is conviction comes from within. You have to develop your own way of analyzing a business.
mm,
Okay,
mm,
I will give you one example. Okay, so I was reading Intelligent Investor by Mr. Benjamin Graham.
mm,
Okay, it was around 12 years back.
mm.
Okay, so he gave a method, net current asset value.
Okay.
Okay, so he was like that. The formula was that. Okay, current assets you have, then you subtract all liabilities,
Okay.
x equity.
Mm.
Okay, so whatever is remaining from that is net current asset value.
Okay.
Okay,
Right.
and then you compare that net current asset value against the market cap. That's his magic formula. He was talking about his magic formula.
Right.
Okay, so net current asset value as compared to market cap. Okay, and if it is less than 2/3 of the
Mhm.
market cap,
Mm.
it's a very good buy it. Okay, so as I was in business of making investment products,
Mm.
okay, I tried to build the product around this
Around this formula.
formula.
Mm.
You're talking about conviction. I'm talking about the conviction. I'm in the market.
Mm. Mm.
Okay,
Mm.
so I built the product around it.
Mm.
It was so typically we do back testing of the formula and everything. That was 2013.
Right.
I got really horrible companies in
Okay.
that
Okay.
when I built the portfolio. So
Based on that formula.
based on that formula, nearly 7 out of 10 companies were home builders. Okay. Those home builders were having a lot of inventory, unsold inventory. It was aftermath of global financial crisis in US.
Right.
Okay, so US was coming out of 100-year bull market. Okay, so housing industry was in shambles.
Yeah.
So they have massive unsold inventory on their books.
Correct.
Okay, for which there are no takers. Okay, which is valued based on accounting standards. Okay, you don't know whether you will sell it or not.
Correct.
Okay, so they were selling it deep discount. I would say deep discount at that time.
Mhm.
Companies like Lana, DR Horton. Okay, they're selling deep discount. It was very difficult product to sell. It was impossible to sell this product to anyone.
Right.
Okay.
Right.
10 years down the line, you know where the housing industry is.
Right.
I would most of those stocks have given 7x, 8x returns from those levels. Okay.
Right.
So the problem is the magic formula. Nobody can tell you
Right.
what to buy. Okay. They have either you give money to them, they will manage in line with their conviction. But if you're thinking that somebody can transfer their business analysis skills, okay, their way of forming conviction, I would say a methodology of analyzing a business and forming opinion about it, and you can trust that business and put your money and manage the money accordingly. It's not possible.
Right.
It is a psychological block. So
Right.
ultimately you have to be in the market, okay, you have to have some experience of the market, stay there for 10-15 years, start with basic ETFs, okay, or you hire a advisor or give it money to PMS. See,
Which is what you started by saying. It's a very interesting point actually, which you said, that conviction actually comes from within. So
within.
So it is, someone can give you their tools, they can give you their, like formulas, like in this case, Benjamin Graham. But to stand by that, that is still a conviction that you have to earn by yourself. Like you have to create it for your own self.
See, thing is, the mentality. If you look at you read the literature from famed value investors, okay, like Warren Buffett, Charlie Munger,
Right.
or, Benjamin Graham. Their way of approaching business is ownership. Okay, they don't see it as a stock.
Right.
Okay, as a side hustle.
Yeah.
Okay.
Yeah.
They see it as a business ownership.
Right.
They
Right.
know the business in and out. Okay. So if you know that your business is going to return 100 rupees to you, okay, every year, okay, and market is valuing it at 50-60, you won't bother.
Right.
For you, it's a bargain price. You will take the money and enter there, right? So if you based on your cash flow that company is generating at present, on conservative estimates, you believe that present value of cash flow is coming out to be somewhere around 500 rupees.
Right.
Okay. And you are reasonably sure based on your analysis and everything. Okay. So now the company is selling at 200. You will buy it. So one very interesting thing about Warren Buffett is he has mentioned, now it's an old thing. It's an 80s, 90s thing. He simply used to say that I don't invest in the business I don't understand.
Correct. Right.
Okay. So he made money in a very simple businesses like candy.
Yeah. Coca-Cola.
Yeah. Railroads.
Correct.
Okay. Very simple, pipeline companies. Very simple.
Linear business model.
Rent-seeking business. There's a certainty how much money he will make there. Right. Okay. Right. So he won't bother.
Yeah.
If company is market is valuing a company at 3 rupee dividend, value is getting 6 rupee dividend every year.
Right.
For him, it's a bargain buy. So that's how that Mr. Jhunjhunwala end up with so much of title. Okay, and so much wealth from it. Okay. Yeah. So you have to first understand the business in and out. Okay, now for example, banking is a complex business today. Okay, you saw what happened with IndusInd. Yeah. Okay, it's a loose change for them, but the problem is the complexity of the business. That is some risk that even the best of the analysts didn't understand. We're covering banking industry for 20 years. Right. Who didn't foresee. Okay, so go for simple businesses. Go for simple businesses. Try to factor all the risks which are there. Go for most conservative estimates of what can happen to this business. Okay. And then form the opinion about the cash flows and the final price. Okay. Right. But how to analyze a business, that you have to learn over the 10-15 years, spending time in the market. Okay. Once you have spent some time in the market, okay, and you take some bets. Right. Okay, some bets which are virtual bets. Some bets are real bets, small bets. So you will understand. You will basically fine tune your stock selection process. Right. Okay. Right. That right.
Which is also the reason why these investors tend to have these highly concentrated portfolios, right? Because you cannot possibly understand the nitty-gritties of 100 businesses.
So now let's come to the other part, that is sizing. Right. Okay. So there's an anecdote my friend once told me. He owns a copyright business. Okay. Okay. In Delhi. So So for one of the company that Mr. Jhunjhunwala was basically he was basically managing one company,
Right.
and so there was some copyright issue over the logo. These guys had the copyright, and Mr. Jhunjhunwala's company used it. Okay, so they filed a case.
Okay.
So they tried to settle here and there, and it didn't work out. So he received the call directly from Mr. Jhunjhunwala.
Your friend.
Yeah.
Okay.
He received the call directly. Definitely he can solve what the other guys cannot do, he can do. He has a stature and everything. So he received the call. So he asked how much you want. So my friend told him that, okay, give me a stock tip. Forget about the money. I will leave everything. Just give me a stock tip. So he told him very clearly. And that's very interesting.
Okay.
He told him very clearly that, okay, I will give you a stock tip. Let me assure you, you will not be able to do anything from it. Okay.
Okay.
Basically, he told my friend that, let's say you have, again, he was like, okay, how much money would you put? I give you a stock tip. कितना डालेगा? ठीक है, 50,000, 1 lakh, 5 lakhs, 10 lakhs. How much would? My friend told me later on the real answer was 50,000 rupees. So he was like, it will not make much of a difference. Let's say stock double भी हो गया. क्या कर रहा है? क्या बना लेगा तू?
Yeah. 50,000, 1 lakh. Okay.
50,000, 1 lakh. Because it's a third party conviction.
Right. Right.
Even if it is Mr. Rakesh Jhunjhunwala, is a third party conviction. So he told him, but I told you just, that throughout 20 years, he kept putting money into Titan because it was his conviction.
Right.
He never bothered with what is the stock price, whatever money he had. So sizing was important. How much money you are putting in those high conviction bets is
Again,
very
which
important.
is interrelated. Your sizing will depend on the size of your conviction. Right?
Yeah. So it will not make much of a difference to your wealth building process if your if you cannot put money on your convictions.
Right.
Okay.
Right.
So he was like that, okay, भाई तेरे में जिगरा नहीं है, नहीं डाल पाएगा तू, क्योंकि मैं बता रहा हूँ, अपने आप ढूंढ. So he
literally told him that you take money from me, don't take a stock tip. It is not going to.
He gave him 1.5 lakhs.
Okay.
He paid for it.
Right.
It was still more than 50,000 and then 1 lakh.
Right.
Actually.
Okay. Coming to the final actionable point, if you were to say for anybody who is either already managing their own portfolio or who intends to manage their portfolio.
There's one more thing I would like to add here. So a lot of people track
right. Exactly.
portfolios.
Right.
Okay. I don't see anything wrong with it. If you'll find an investor who is doing well, definitely there is a